Hey guys, John Polemy here. Wanted to do a quick update on some of the public pronouncements I had made, some of the stocks that I had bought that I had talked about publicly on Twitter or even in some previous videos as teasers. And I wanted to just update because of earnings and some other things that were happening and just let people know what I was doing because I do get emails about it. Now, why do I talk about these? I mean, these are not ones that I put a lot of work in. These are mostly ideas that I get from FinTwit. What's FinTwit? You need to get on Twitter. You need to start following me. You need to start following other smart people. And these are ideas that I got from other folks on FinTwit. And I just amplified them on my channel, but I also owned them for the reasons after I did more research. So that's that. These are examples, okay, of why you need to be on FinTwit and some of the reasons why. I mean, you don't have to get on there and tweet. You can just curate a group of people that are smart and know what they're doing, and that can help generate ideas. I get emails and direct messages all the time. How do you get your ideas? Where do you get your ideas? Well, I mean, I built up my Twitter from zero to 3,500 people, and I exchange ideas with people. I read what other people say. It gets my thinking started, and then I deep dive their ideas. Okay, or sometimes I share ideas with other people, and some of the ideas I just come up with my own. We talked about what Charlie Munger said. You need to find out and seek out smart people. Why? Because no one's smart enough to think it all up by themselves. So that doesn't mean that I don't have any ideas of my own. I mean, we're doing fairly good now in the Actionable Intelligence Alert newsletter. But I like to tease this stuff. I like to, put a couple things out there just for discussion purposes. And this is just an example of what can happen, right? I mean, why you need to be on Twitter and why you need to be following FinTwit. There's a lot of smart people out there, and a lot smarter than I am. Caledonia Mining. I've been involved with this thing off and on for 10 years, okay? And it's finally hitting on all cylinders. It operates in Zimbabwe, single gold mine there, the Blanket Mine, one of the lowest cost, all-in sustaining costs are around $650, $700 an ounce. It's one of the cheapest gold mines in the world. What's the problem then? Why did I sell it? Well, I mean, it was up 50% the week before last. That's why in 1 week. I mean, you see the gap up. Nothing necessarily wrong with the company. But it's a valuation thing, and can this thing double from 29? I mean, I almost hit the top tick on this thing. That's not a skill. I mean, I just got lucky on this one. I mean, this thing was really overbought. I mean, this thing's screaming right here, take profits, help me, help me. And you saw what happened, okay? I expect if the gold price moves higher, this stock will move higher, but it's way, way extended, okay? I don't know how far it's going to drop. I don't know if I'm going to buy it again. But I think there's other gold stocks that are out there, and I think there's other opportunities, which I'm going to talk about. One of my public names that I have held that I'm going to roll this money into because I think it has an opportunity to go multiples. This stock doesn't have the opportunity to go multiples. I mean, if it's at the point now where it's probably going to follow the gold price or go up 2 or 3 times the gold price. Okay, so. And then you're really taking on risk, right? In Zimbabwe, there's issues with the currency there, and it is what it is. Okay, it's not a safe jurisdiction. It's gotten a lot better than it was, but there's other things you can do that are less risky. So, just wanted to talk about that. That I pretty much sold all my Caledonia. It's a great company. If this company was located anywhere else besides Zimbabwe, it would probably be multiples of where it is. But it is what it is. So let's talk about another company, Ruger. They came out with earnings, and this thing has moved about 100% off the lows of the COVID lows back in March. And what do? They make guns, right? And they make my favorite gun, the Mini 14, and which I still can't get, by the way. You can't find them. And Ruger in their second quarter earnings report. They had some commentary there. I didn't listen to the report, but this is just from the press release. You can see the sales were up, earnings were up, and what they said. I'm going to listen to the quarterly report this weekend, but I just wanted to get this out. Here's what the CEO said. Consumer demand, which began to surge in the latter stages on the first quarter, which was right when COVID was hitting, that first demand surge due to COVID, end of the world scenario, continued to intensify in the second quarter. Well, why wouldn't it? I mean, we're having riots and insurrections all over the country. Not to mention the fact that right now a lot of people are starting to wake up and say, there's a good chance there could be a Democratic Congress and a Democratic president in November, and the first thing they're going to go after is guns. That's what people worry about. So this happened last election. I had a lot of people go out and start buying guns thinking that Hillary Clinton was going to win and go after the guns. So this is not going to be a long-term deal, I don't think. I mean, I think into the election, and if the insurrections and rioting continues, and that gets a lot of play on the news or gets a lot of play on social media, people are. I mean, I'm going to get my Mini 14. I mean, when I can. I mean, I've got my order in, and I don't know when I'm going to get it. So, they're hiring. Ruger's hiring people. They're trying to increase production. They stopped their hiring during between March and June, I think, because of COVID, but they're back to manufacturing. And the good thing about it is they announced their normal quarterly dividend, and they also said they're going to pay a special dividend of $5 a share because they have excess cash. So this thing is just chugging along. It's a little bit overextended itself. Could be a sell on the news event. I don't know. It's 50 days way above the 200-day, but it looks like it did consolidate these gains pretty good, and then kind of stair step its way up. So I think this thing will move higher through the summer and into the fall. And if Trump gets reelected, of course, this will come off because people will be secure that there won't be any guns, or gun confiscation. That's not what I'm predicting either, but I'm just telling you what drives people to buy guns. I mean, and you're seeing a lot of discussion from people that didn't even own guns, were never even thought about owning a gun, or never owned a gun before, talking about buying a gun now. So it's good for business, right? I mean, uncertainty. People don't like it. So, this is done fairly well, and I'm going to stick with it for right now. We'll see what happens. But like I said, it could go either way. It could be a sell and news event. I think people thought the earnings and sales would be a little bit higher, but I'm not displeased. I mean, I think they're probably production constrained a little bit. Like I said, I have to listen to the conference call and see what's really going on there. But like they said, I mean, as a result of this oversized demand, inventories were significantly reduced at all levels in the channel during the second quarter. So regardless, at least, they're going to have to restock. And that's what I'm waiting for, right? You can't even, I'm down here in South Texas. There's nothing happening. There's no insurrections or riots down here, but there's all the guns and ammo sold out anyway. So what am I doing with my Caledonia money? Well, I'm rolling it into natural gas and Antero Resources. I talked about it in a video. Why? Natural gas has been in a bear market for like 12 or 13 years. Everybody hates it. Nobody thinks, everybody's still working with the mindset that natural gas is going to be cheap forever. And what we're seeing is that rig counts have collapsed, fracking crews have collapsed. I'm talking about the numbers year over year. And with the high depletion rates, it's supply and demand again, right? So what we're seeing is associated gas with shale oil production in West Texas is down. And what we've seen is a collapse in the year-over-year natural gas production growth from shale. So, I mean, I can't put all the charts on here. You got to do some of the research yourself. But this got this from one of the guys on Twitter. He puts a lot of good natural gas charts up. He's up in Minnesota. He knows who he is. This is what I think is going to manifest itself next year. My views on the weather. I think that going into 2021 and further out to 2025 and this next upcoming decade, it's not going to be as warm as people think. And if you're in a situation where you have the growth in shale production of natural gas is actually turning negative now, and you get into a cold winter, that would be a booster of prices, shall we say. I mean, when natural gas gets going, prices can go up multiples of itself in a short time. It can be a very volatile commodity. Antero, they just came out with earnings. I don't have time in this video to go through the whole earnings thing. You have to do some of this work yourself. But I like a couple of the slides from the presentation I wanted to go over. This company is kind of like, people have thought it was going to go out of business. And I think for the last 6 months or 9 months that I've been following it or looking at it, I mean, I've been kind of impressed that they've really exceeded expectations. This idea that, they weren't going to be able to get enough, produce enough gas to get it into the pipeline. They were overspending. I mean, I kind of like what they've done here in this chart, this particular slide that they put out on their second quarter earnings. Producer strength is a key attribute for a sustainable development plan. So cost reduction initiatives, they've cut back on drilling, completions, other areas. So they're going to reduce expenses, right? That's happening across the industry, not just at Antero. That's why you're seeing that decline in natural gas year-over-year production gains. Asset sale initiatives, okay. World-class hedge book. They've got 94 and 100% of their projected natural gas production hedged in 2020 and 2021 at 287 and 277 or million BTUs, respectively. So, with the current natural gas price at about $1.75 or whatever it is, I mean, you're getting paid significantly more. So that's going to lead to what? Higher free cash flow. Okay. They cut their budget, so they're saying that they're going to have $200 million in projected free cash flow in the second half of 2020, and that's a lot more than a lot of people were thinking. And I think another thing that's going on here is robust liquidity. That was one of the things. They have a lot of perception of a lot of debt that's due in 21 and 22, but they have a plan to not make it a big issue. So they have ample liquidity of $1 billion to address the 2021s and to address the 2022s. And this is what we're talking about. This other slide that talks about their liquidity. Here's their pro forma liquidity. I'm not going to get into all this. This takes like an hour to go through. You got to go through it yourself. You got to kind of understand how they did some transactions. What I really like what they did is this really smart management. They repurchased $841 million of some of their debt through second quarter of 2020. They've been repurchasing it, but they've been buying it at a discount. Okay, so the market has devalued their debt because they thought there was a liquidity concern, and Antero has been in there buying that debt and retiring it at a discount to its par value. That is what you want to see. Okay, that's where you see this thing going from the perception in the market changing from going from bad to less bad. That's what I say here. Market perception is changing. The stock has been rallying. Now, this is a very volatile stock. This thing will move 10, 15% in a day sometimes, okay? So this is not for the faint-hearted, but some of the analysis which you can find, there's some good analysis out there that will walk you through it. You have to go through it yourself, though. You have to listen to the conference calls. You got to dig through the 10Qs, and you got to kind of understand what's going on here so that you understand why this has a multiple potential here. But, I've seen estimates of $15, $20 a share out there, and the thing's trading for 3 and change, I think, right now. So, I mean, it could double and triple, go up 5 times easily. I'm not saying it's going to do that. There's no guarantee we'll do that, but you can make the case that could happen in a environment where natural gas supply is going down. You get a hard winter, and even without a hard winter, I think the price of natural gas strengthens in the next year. After a 13-year bear market, after all the capital constraints that have been put on all these different companies, it's just across in the entire hydrocarbon production E&P universe. So just wanted to get that out, a quick video. I'll have a longer video tomorrow. I just wanted to talk about these. These are, like I said, these are the stocks I've just been talking about publicly. I own these. I did sell Caledonia last week, but I think Antero has a good run in front of it. It has a good risk reward potential, and this is the kind of things that I'm doing, deep diving. This is the kind of things I'm doing in the Actionable Intelligence Alert newsletter. And you can look in the comments section of some of my videos. I have subscribers that are in there, get some social proof. I've got people that are happy with some of the results. The thing, the money printing, the supply constriction across the entire commodity and resource complex is now starting to lead to higher prices. Okay, gold, not only just gold. Uranium is looking more more and more better on the supply and demand fundamentals. The oil market is going to tighten over the next couple years for the same reason we talked about why the natural gas market has the potential to tighten. So there's a lot of wind building in our sails, shall we say, and we've been sitting here in the doldrums for a couple years, kind of spinning our wheels, but now it looks like the things might be going our way, macro and micro. So quick video, guys. That's it on this one. We'll talk to you soon. Thank you.